Anthropic files for an IPO, what changes for Claude and AI spend? Explain why Anthropic's June 1st confidential S1 matters beyond IPO gossip, how it changes the way investors and enterprise buyers will judge Claude, and what it signals about AI spending discipline across the market. Anthropic just did something that changes how the market will read every Claude headline from here. On June 1st, the company said it confidentially submitted a draft S1 to the SEC for a proposed IPO. That does not mean shares trade tomorrow. It means the company is starting the process that could move Claude from a privately funded growth story into a publicly judged business story. Here is what is confirmed. Anthropic said the IPO depends on SEC review, market conditions, and other factors. A few days earlier, it said it raised $65 billion at a $965 billion post-money valuation. It also said run rate revenue crossed $47 billion earlier in May. And on the product side, it released Claude Opus 4.8 while expanding enterprise deployment stories like KPMG's 276,000-person rollout. In plain English, the filing is landing on top of a very aggressive growth narrative. Private markets can reward momentum, strategic positioning, and optionality. Public markets are less patient. The skeptical question is obvious: can a frontier AI lab keep spending heavily on compute, ship faster models, discount where needed, and still convince investors the economics are durable? Once Anthropic moves closer to an IPO, every future Claude launch gets judged through that lens. The scoreboard changes from is Claude getting better to can this business keep scaling without the cost structure breaking the story. For operators, an IPO path cuts both ways. On one hand, it can increase trust because more disclosure and scrutiny can reduce the mystery around a strategic vendor. On the other hand, public market pressure can tighten pricing, slow experimental spending, and put more focus on which product lines really drive returns. If your team uses Claude for coding, analysis, or agent workflows, the right question is not which model won this month. It is which vendor can keep improving while holding a business shape that survives tougher market scrutiny. There are real unknowns here. We do not yet have the public S1, so we do not know the full income statement, cash flow picture, or concentration risks. We also know the sector is now hearing more direct complaints about AI sticker shock from enterprise buyers. So the hard question is whether Anthropic can keep product momentum high while proving that large customers are getting enough ROI to sustain the spending. A confidential filing is a strong signal. It is not proof that the economics are settled. Monday morning, watch 3 receipts. First, any sign of pricing discipline or changes in packaging around Claude and Claude Code. Second, more proof of large-scale customer deployments that show actual work getting done, not just logos on a slide. Third, any indication that AI budget conversations are shifting from land grab to ROI defense. If you build AI workflows yourself, this is also a useful reminder that the valuable part is often not the model alone but the governed system around it. Howard's Side Hustle Command Center is one simple example of turning AI-assisted workflow design into a structured product, and disclosure matters here. That is Howard's ETSE product, not financial advice, not an income promise. My judgment is that Anthropic's filing is less about an IPO date and more about a regime change. Claude is moving into a phase where capital discipline will matter almost as much as capability. The question I would leave you with is this: if public markets start grading AI labs on discipline instead of hype, which matters more next, model quality, enterprise adoption, or spending control? Create a polished explainer video in explainer format using classic style. Keep the narration calm, source-backed, and consequence first. Use two-host energy if supported, a lead narrator plus a skeptical analyst who keeps asking whether real demand and real economics are the same thing. Change the visual idea every 3 to 5 seconds using source cards, timelines, enterprise deployment cards, spend pressure charts, and a buyer watch list. Do not use fake realistic trading floor footage or invented executive scenes. Use illustrative source cards, charts, office/product panels, and clearly marked conceptual finance visuals only. 1 June 1, 2026 2. Form S13. $65 billion Series H4. $965 billion post-money valuation 5. $47 billion run rate revenue 6. May 28, 2026 7. Claude Opus 4.88. 1M context window 9. Same price as Opus 4.710. 276,000 plus KPMG employees 11. 138 countries and territories 12. May 19, 2026 13. 2026 14. Common stock IPO depends on market conditions 15. SEC review first 1. One-page summary 2. Links mentioned 3. Key terms explained 4. Practical examples 5. Watch list and risks not financial advice. Educational analysis only. #AI #Anthropic #Claude